Today's the big day. FOMC is right around the corner, happening today at 2 p.m. Eastern Time. The Fed is expected to raise rates 25 basis points up to 4.75%. The JOLTS job openings came out this morning, higher than expected, around 11 million. NFP comes out on Friday, but ahead of that event, we have ADP non-farm employment change. Those numbers came out worse than expected, coming out around 70,000 fewer jobs than forecasted. Yesterday, monthly Canadian GDP came out as expected at 0.1%, and we also had New Zealand's unemployment rate come out, forecasted to remain unchanged, but in reality raised slightly up to 3.4%. I want to remind you that you can watch the FOMC event live right here on the A1 Trading YouTube channel, so come join us to watch the spike.
All right, so here we are in the Edge Finder. Let's start off by checking out the market heat map first, like we normally do. Let's see how all of our assets are trending so far today. I'll remind you that the market heat map shows you, like I just mentioned, how all of our assets are trending. We have these bar graphs showing the percentage changed, either up or down, if it's up or down on the day. And it's getting updated every 15 minutes. So as the market moves, so does the market heat map, to keep you as up to date as we can with how all of these assets are trending. So starting off up top here, we have our major US dollar pairs. Euro USD being the biggest mover to the upside so far today, up 0.35% on the day. USD JPY, on the other hand, down 0.4% on the day so far. Our major indices here, the German 30 is the biggest mover so far, up 0.59%. And all three of our US indices are in the red today. US 30 falling the most, down 0.6% on the day so far. I can see here, taking a look at all assets, that the German 30 is actually our biggest mover out of all of our assets, up that 0.59% on the day. If we want to take a look at gold and oil, we can scroll to find USO and XAU USD right here. So gold down 0.26% on the day so far. Oil down 0.66% on the day so far. Most of our euro pairs are up except Euro JPY. That's the one lone euro pair that is not doing so well today. Down only 0.09% on the day though. Euro CHF up 0.41%. Most of our pound pairs are up. Euro GBP up 0.23%. Pound JPY down 0.29%. All of our pound pairs are in the negative so far today. CHF being the biggest one to the downside, down 0.48%. Euro JPY still down, only down that 0.09%, like we just mentioned right here. Our Swiss franc pairs, just mentioned CHF JPY, but Euro CHF is up 0.41%.
Hey traders, would you like some help with technical analysis? Well, lucky for you, we're giving away a free technical analysis guide. That's right, completely free. It's an entire guide all around technical analysis. The guide includes subjects like support and resistance trading, MACD indicators, trend lines, candlestick pattern trading, RSI indicators, and much more. So make sure to click the link in the description, fill out that information, and we'll email you a technical analysis guide right away.
Lastly, Australian dollar pairs and New Zealand dollar pairs. We have the Australian dollar up 0.21%, Aussie JPY down 0.13%, and New Zealand dollar pairs NZD JPY down 0.29%, Euro NZD up 0.25%. So US dollar pairs and Euro pairs seem to be performing the best so far today. Yen pairs certainly seem to be performing the worst. And when it comes to our indices, all of our other international indices, the JP225, UK 100, and German 30, are doing all right on the day. German 30 actually doing very well, but US indices doing very poorly so far today. I want to check out the Fed tracker ahead of our FOMC event. This is another little feature that we have in the Edge Finder that I don't talk about too much, but it is certainly super beneficial to look at ahead of FOMC. I want to go ahead and remind you that if you want the Edge Finder for yourself and access to all of these awesome trading tools inside of the software, you can find a link to it down in the description below, and you can get it at a discounted price when you use code A1YT at checkout. So we still have a lot more Edge Finder to look at. We just took a look at the market heat map. We're taking a look at the Fed tracker now, and we're also about to go into the watch list where we can see our buy and sell signals, and we're going to break down a currency pair or maybe two. But again, I'll remind you that you can find links to the Edge Finder down in the description and use code A1YT at checkout for a discounted price. All right, so let's see, inflation rate forecast. Here we are in Q1 of 2023. And by the end of Q1 2023, the inflation rate forecast is supposed to be at 6%. So we're supposed to drop slightly from 6.5% down to 6% by the end of Q1 2023. That's the goal. Interest rates raised up to 5%. We'll see if that happens. They're expected to be raised 25 basis points up to 4.25%, but could they get raised again next month, slowly but surely, incrementally, up to 5%? And then perhaps even higher, Q2, Q3, and Q4, expect it to be raised up to 5.25%, as that should hopefully help inflation fall in the following months. But we'll see. So by the end of Q1, hopefully we can get inflation down to 6%, and we'll see if interest rates get raised up to that 5% there. Here's another way to look at it. That's not the bar charts. These are just the numerical values, what we're looking at. And then, of course, we have our US dollar impact, stock market impact, and gold impact. And I'm not going to get too in-depth into this because we have a lot of other things to take a look at here. But you can see our different metrics here: GDP growth, inflation, unemployment, interest rate, and money supply. The change up, if that number goes up, typically speaking, is that a good thing for the dollar in these areas, a good thing for the stock market in these areas, a good thing for gold in these areas, or is it a bad thing? We have these blue and red arrows to demonstrate. Typically speaking, for example, a change in GDP growth, if GDP grows up, the economy is doing well, that typically has a positive impact on the dollar. We can actually see all of those numbers right here. So US GDP growth currently 2.9%, US inflation currently 6.5%, interest rates 4.5%. All of those things here. So interest rates potentially getting raised today. That could be a good thing for the dollar if that does happen, up to 4.75%. For stocks, on the other end, not so good, and we're already kind of seeing some of that sell-off happening already today. Same thing for gold. Interest rates raising, typically not a good thing for gold, because gold typically works inversely from the dollar. So if the dollar is performing better, typically gold is not. So with that out of the way, let's take a look at the watch list. I'm going to remove our neutral biases just so that we have our buys and sells here. And I'm also going to remove the indices and commodities if we have commodities that are listed as a buy and sell. Currently, we do not. So we are left with Euro GBP being a strong buy. Here's a new strong buy for you that was not here yesterday. Euro GBP score of +6, so that's something that we can take a look at. We also have two strong sells, GBP NZD and GBP AUD. GBP NZD has been a strong sell for a while, score of -8 right now. GBP AUD, a new strong sell, score of -6. So I would love to take a look at a US dollar pair ahead of the news event. And I'm seeing GBP USD with a sell score of -5, which is a pretty solid sell score. We're just 1 point away from getting that strong sell bias. So I'm thinking it would be nice to take a look at that, but I'm also interested in taking a look at Euro Pound because it has a strong buy bias, score of +6, and we have a new pair right here. So I might save Euro Pound for tomorrow. We'll break that down. And today I'll break down Pound USD so that we can get, like I said, an update on some US dollar numbers ahead of the FOMC event happening later on today. So let's take a look. Pound USD sell bias, score of -5. COT data coming out to a score of -2. Retail sentiment, on the other hand, neutral, score of 0. Let's take a look at those numbers right over here. COT data, or institutional trader data. We're taking a look at what the institutional or smart money traders are going long and short on. You can see that for the US dollar, 64.74% long and 35.26% short from the institutional traders. So favored on the long side when it comes to the US dollar. The pound, on the other hand, 62.81% short and 37.19% long. So institutional traders certainly favored short on the pound right now. Retail sentiment, I understand why it's getting that 0 or neutral score, because retail traders are 50-50 long and short on the pair as a whole right now. So our trend reading is a score of +2, our one lone little blue box here. And taking a look here under the trend projection section, you might be wondering, why is this a trend reading score of +2 when it's kind of stayed a little stagnant right here, hasn't done a whole lot of moving, and then over the past couple of days it's actually fallen off some, and we're getting a sell bias here. So why is trend reading showing a blue marker? Well, it's because we're looking at the chart at from a daily view. We don't have hourly or 15-minute chart, none of those shorter time frames. This is simply just showing each day's price point. And we're only looking back for a couple of days because we have this small box here. This is more so to show this price forecast here. But if we take a look at the chart on TradingView, and I have it here as the daily chart, we can see that pretty much ever since September, this thing has just continued to rise and rise and rise. So we are starting to potentially sell off. We've had 3 red candles the past 3 days. And so based on all of these other metrics here, fundamentally speaking, COT data, retail sentiment, potentially if retail traders continue to go long, then we typically go short. So based on all of these metrics here, this could be a good entry point to get in on a nice short pretty early on, right as it begins to fall off. Because again, trend reading over the past couple of weeks, months really, it's just continued to go up and up and up. Had a couple sell-offs right here, of course, and here as well. But overall has just continued to go higher and higher throughout the weeks, but could potentially be turning around. Now let's look at our fundamental section. GDP growth, inflation, unemployment, and interest rates, all scores of -1. Take a look at those numbers right over here. So UK GDP growth currently negative 0.3% compared to the US 2.9%. UK's inflation 10.5% compared to 6.5% here in the US. Unemployment 3.7% for the UK, 3.5% for the US. And interest rates, this is the big one. Pound interest rates 3.5%, and US dollar interest rates 4.5%, expected to be raised up to 4.75%.
Make sure you guys check out the links in the description if you need broker recommendations, access to our free Discord, or want to chat with us on Telegram. If you're interested in our trading software, the Edge Finder, you can find that in the description as well. Thanks for watching.